Hey everybody, happy Monday, Friday, whatever. We're looking at the week preview for the week of November 18th coming up here. And the first thing we want to do is start with the economic calendar. This video is sponsored by IG Markets US. IG is a leading Forex broker. And so as we look at the calendar here for next week, you can absolutely positively tell that there really isn't anything super giantly important. The calendar will say that housing starts is a high priority item or jobless claims. Really the most important thing on the calendar is the CPI out of the US measuring inflation, or maybe German GDP, which we want to look at because there's this fear that Germany has entered into a recession. So maybe we'll take a look at the dollar, maybe we'll take a look at the euro, but basically next week is free of interest rate decisions. There's no giant employment reports, so it's not really something that we've got to worry about significantly. So that gives us a chance in a week like next week to look at something a little bit more exotic. And as many of you know, I do love the Mexican peso. So if we look at the Mexican peso chart, you can see that it's kind of rounding out here, suggesting that there is the potential for a move higher. So if it does move higher, how do we know that that's the case? So I might look at a break above 19.8. Now, if that happens, the next obvious number that comes into view is 20.2, and the next obvious number that comes after that is 20.6. Those are the targets on the upside if the move goes bullish next week. That's going to come potentially on something like a positive, higher than expected CPI report out of the United States. However, the counter scenario to this, the other side of the coin, is a break below 19 even. And if that happens, it puts into view something like 18.4. The problem here is that there's not much more after that. Once that level breaks, or if that level breaks, then we're looking at numbers that are way, way farther down on the chart here. We're looking at levels like 18 even, or even 17.5. And those numbers are way, way lower. So that's the bullish and the bearish scenario for the peso. Let's take a look at what the euro might look like going into next week with German GDP on the calendar here. Remember, there's fears that Germany has already entered into a recession. And there are fears in Europe about Southern European debt, about Italian debt. The ECB isn't even buying Greek debt at all as part of their quantitative easing program that's been renewed. So let's look at the case to be made for a bearish scenario on the euro and then counteract it with a bullish scenario. Now, as we all know, all trading involves a substantial risk of loss and is not suitable for all people, and past performance is not necessarily indicative of future results. But at least we can look at a point and a counterpoint for the bullish and bearish view on the euro. So let's say that the euro somehow continues to recover through next week, and let's say that even German GDP surprises to the upside. What we're really looking for is a move above, let's say, I'm trying to think of like $1.1175 or so. If we can break and stay above that level, and I would say even on a 4-hour chart, that puts into view numbers like $1.1250. And then if that level breaks, it puts into view $1.14, which I don't know if a lot of people even imagine that the euro could ever get to that number. But what's strangely happening is that there's a giant appetite around the world for government debt. And that includes European government debt. And you got to have euros to buy that debt. So there has been somewhat of a little resurgence here in the last few weeks in the euro. But there's a case to be made also that we could be falling. So let's say that this kind of inverted head and shoulders pattern right here that seems to be suggesting potential upside momentum. Let's say that that breaks. How do we know that that breaks completely? Well, the suggestion that it's broken completely is going to come below $1.09. Now, if price moves below that $1.09 level, we have to go way back in order to find numbers. Like, I can't even find the numbers here. Like, it's so difficult to find these numbers historically. So let's see if we can. There we go. So how do we make sense of a move below $1.09? You have to go pretty far back on the charts to do that. And if that level breaks, you're looking at a substantial support level broken, and that's going to put in view 3 different levels of support below that. $1.06, maybe even then $1.550, and then at the very lowest here, just around $1.03. And that's going to suggest massive weakness in the euro. And in order for that to happen and be sustained in this downward trend, you're going to want to see German GDP that's worse than expected, or numbers or suggestions that Italian banks are having trouble, which they're not right now, but they could in the future. So those are the things you want to be on the lookout next week. And those are the levels you want to see. Remember, all trading involves a substantial risk of loss. We're not sure exactly which way these things are going to go, but we want to be prepared in either direction. Maybe later on in the week this week, we'll come back and take a look at the British pound with these UK elections coming up in the near future. I'm Rob Booker. We'll see you soon.